Hi, this is Dwayne. If you are watching this video, then you are registered to take the trial in the LOGIC247 alert channel on Telegram. And also, whether you know it or not, you're also registered to spend the next 3 days in the live training room with us, 2 hours a day from 9:30 a.m. to 11:30 a.m. Eastern. You'll be able to see our methodology, our indicators, our persona up close, and you'll be able to ask all the questions that you might have. All right. Purpose of this video, it's going to be really short. I just want to touch on a couple of the most frequently asked questions. We don't have a trial every week. We don't have an alert trial every week, not even every month. So this is kind of a big event, special event, open house, 2 days, both the training room and the alerts. Michael has created a video that covers some of the most frequently asked questions for the training room. So I'm doing the same thing right here with the alerts. There's certain terminology that we use, certain abbreviations. The reason for the abbreviations, the environment at a trading desk is usually one of two things: feast or famine, chaotic or calm. Calm as in watching paint dry. So when you're trying to stay focused on what's happening right here, right now, getting distracted by writing these long flowing statements, well, it could cost money. So there's plenty of time for that to elaborate. So we have some shorthand that you will know all of the abbreviations because we're going to post them along with this video. And stuff like FT, what does that mean? PT. You'll see it. Valerie will post the list. Okay? All right, so real quick, let's just run through the most frequently asked questions. Number one, weekly trading zones. And if you've been hanging around CFRN for any length of time, you know what they are, or have an idea anyway. For those of you that don't, we originally created I first published the weekly trading zones December 14th of 2009. It is exclusive to CFRN partners and passport holders. What they are important prices and important places in the market, places on a technical chart like the one I have up right now. Now, when price reaches a weekly zone, as in, this was the Sunday night Globex Open, we consolidated at the zone, ran up to the zone. It kind of looks like we hit it almost to the tick there. Came back, sliced through the zone. Now, I'm going to go back and tell you what these different things mean, because you can see it here, what we expect to happen. Consolidation, back up to the zone, an attempt to the zone, back up to the zone, and then down to the zone. Price is always attempting to reach the zone above or the zone below. As it pulls away from a zone headed north, then the next place to expect price to go is the zone overhead. When price gets rejected by a zone, as it did here, we expect it to go to the zone below. When price falls through a zone, we expect it to go to the zone below. When price finds support at a zone and consolidates, we expect it to go to the zone above. When price consolidates and turns south from a zone, we expect it to go to the zone below. However, it doesn't always go in a perfectly straight line. You might get a leg or retracement, which turns into a double top, which adds to the bearish connotation. And of course, yes, what do you expect? Price to go to the zone below. That all sounds very simple, and it is. Everything that we do is designed to be incredibly simple. I don't know if that speaks to us as simple folk, but hopefully it does. There's so much confusion and stuff out there. Okay, now these three things I mentioned. Now I want you to think about this. There are very few absolutes in the market. So for me to be able to tell you that I absolutely, positively want you to see for yourself, that only one of three things happens when price reaches a weekly trading zone. Again, we've been publishing these every Monday morning, 6:15 a.m. Eastern, for our partners and passport holders since December 14, 2009. That's, I don't know, pretty long time. 10 years ago, coming up on 9.5. We've been consistent in the delivery. We've been able to be consistent in the delivery of the zones because the market is consistent in its behavior. I know that's a big statement, right? Over the next 3 days, everything that I tell you in this little short explainer video, you'll be able to see it in action. Okay, so three things happen. What are the three things? Consolidation. I already showed you consolidation. Consolidation is this right here. You may have heard it referred to, depending on who you hung out with as a trader, coiling. If you heard that before, the market's coiling for the next big move. See, it coiled like a snake and it struck. Okay. Now, that is the most likely thing to happen. Over and over, again and again, day after day, week after week, year after year. That's what happens. All right. The second most likely thing is rejection. This is not picture perfect rejection, because picture perfect rejection would show just one wick sticking up and touching the zone 2814 to 2815. Now let me just see what this swing high is. And not that it matters, because I will teach you that zones are an area. Okay, so it ran up and hit, in this case, 2814 on the nose, right? So let's just imagine that you had just this one candle here with a big wick sticking up, and it's like somebody walked into a room, laid their hand on a hot stove, and beat a hasty retreat. Rejected. Price was rejected. All right. The third thing that can happen, only three things. The third thing that can happen, the least likely thing to happen at a weekly trading zone, is for price to slice through the zone like it wasn't even there. This is a 30-minute candle, and it just sliced right through the zone. Okay, does that mean it's broken? No. When we get the slice, what we expect to happen is for price, after that initial slice, to retrace, to pull back up. In this case, because we sliced down, pull back to the zone, confirm that it is going to be good resistance. Yeah? And then continue in the direction of the slice. Right down to the next zone where it does the most likely thing, consolidates. Now, you see how this wick is just sticking? That's a real, all right, we sliced, we pulled back to confirm this area is going to be, because remember, it was consolidation territory, and we sliced through it. Okay, can we trust it to be good resistance? This says we can. And you see what happened to price. Now, this is from today. This is this whole week. I'm talking to you February 26th, 2019, 11:09 p.m. Eastern. I don't know if you're aware, but the markets were closed tonight. There were some technical difficulties at the CME. We'll get to the bottom of it and report it on the radio show tomorrow. All right. So you got it. Three things at a weekly trading zone: consolidation, rejection, the slice. It's convenient that we found all those things right here on this one chart over 2 days. Sunday night, Monday. Today was Tuesday. The trial starts tomorrow morning, Wednesday morning, 3 p.m. Eastern, which coincides with the London Open. I can't promise you that there will be high probability trade setups at the London Open, but we'll be looking, and they will be in the channel if we find them. Okay. Now, let me say one last thing about the zones. This market truth alone can set you free. What do I mean by market truth? Well, we all have different things that we believe about the market. Okay? Whatever those things are, what we have to ask ourselves is, why do we believe that? Do we believe it because some guy said it at a seminar in Vegas and it cost us $7,000 to go there? So we better believe it. There better be some kind of takeaway. Or do we believe it because it's something that we have maybe heard from someone, but then we didn't just believe it, we put it to the test. We drug it out into the light of day, see if it could stand up and salute, if there was anything to it. I promise you, if you sit with a legal pad and make a list of things you believe about the market, and then come back the next day, and in the second column, write down why, you're going to see about half or more of your market beliefs crumble. And that's a good thing, because that gets rid of some of the noise, and you can focus in on the ones that, maybe you've kind of been watching. And now this has nothing to do with telling the future. It has everything to do with learning to understand a narrative to whatever's happening on your chart in front of you. What is your market story today? Tomorrow I'm going to do a video and I'm going to walk you through my narrative. I'll also be walking through that narrative on the live radio broadcast tomorrow. All right. So if you tune in for that, you'll be good. Second most frequently asked question, do we jump right into the market when the entry price is hit? Okay, an alert has an entry and it has a target, and sometimes it will have multiple targets. Okay. Let me say this. Trade everything in SIM until you're consistently profitable. Now, I don't care what you're checking out, what you're looking at, indicators, methodology, alerts, oscillators, always trade in SIM until you prove yourself consistently profitable with whatever it is you're taking a look at. Now, some consider aggressive risk management the primary predictor of who has the potential to succeed as a trader. I want you to think about that, okay? Not the aggressive trader, not the risk taker, but the person who understands the reasoning, common sense, the decency of aggressive risk management. They are ahead of the game. You are ahead of the game. Some people have to lose an obscene sum of money before they're ready to embrace that truth. I wish it weren't that way, but, well, there it is. When an alert comes, it may come at 1 a.m. Here's what you should do. You should turn off the alert service. When you want to sleep, rest, have dinner, do anything other than trade. Okay? You with me? All right. Turn it on. Now, when you turn it on, there's going to be stuff that's probably come out since you turned it off. The pipeline's filled. Check to see which ones have triggered, because if they've triggered, there's a high probability they'll trigger again, because important prices in important areas are almost always tested. You'll learn more about that over the course of the trial. All right? Now, and if it hasn't triggered, obviously you'll be watching that as price approaches the trigger. Okay? Never feel compelled to trade an alert just because it's an alert. Observe the alert, observe the chart. If the reason behind that particular trade is not self-evident, get a hold of me. Get a hold of one of us. Talk to, ask a question in the training room, ask it when we have the webinar Friday, or just message me in Telegram, and I'll get with you and I'll get you an answer. Because I don't want you to stumble blindly through the trial. I want you to fully embrace it and understand what it means to you. Okay? Once you have watched, now, when you see an alert, let me show you what an alert looks like. You've probably already seen one, but hang on. Hang on just 1 second. Okay, there we go. Okay. When alert comes out, it will say something like, alert number 1445. Consider selling the NQH9, 7015 to 7005 to 6990. Trail if possible. TIP. TIP. Trail if possible. Okay. Now, when I publish this alert, I wanted everyone to remember that we have a weekly trading zone for the NQ, or we did at this time. This alert right here goes back to the last trial. Yeah. Okay. So a lot of information here. What does it really mean? Most people who are executing in SEM or however they're executing the alerts are simply going to sell 70-15. Others may choose to wait a beat for some smaller time frame candle to close above or below that alert, sort of a confirmation, and they enter there, which is perfectly fine. Confirmation always costs a little money. Doesn't make it a bad thing. You just have to recognize it for what it is. It's a benefit that you're paying for. Doesn't always pay you back, but often it pays you in multiples. All right. Now, what about this other business to 70.05 to 69.90? All right. 70.15 to 70.05. 10-point move in the NQ. $20 a point, $200 per contract move from there to there. At 70.05, in this case, all right, and each alert is unique and different, I saw the potential for turbulence at 70.05. So really what I want you to do is I don't want you to have blinders on. But as you approach the 70.05, I want you to take a look around. Not the room, the chart. Take a look at the chart and see, does the chart still support you being in this position? Do you have the wind at your back? Is there momentum? If so, no reason to get out of a perfectly good trade. And then the final target, 69.90. So that has taken us, we've traveled at that point 25 NQ points, $20 per point, $5 per tick, 4 ticks to a point. So that's a $500 per contract move. Okay. Now, do I anticipate that it will go to 69.90? Yes. This is a heads up. Take off the blinders, look around, see what's going on. This is a reminder that there's a weekly trading zone support level below at 69.79/69.80. So again, a lot of information. So typically the entry is at the alert price, unless you choose to do something different, and you're certainly entitled to do that because this is discretionary trading after all. Should you get out there? Again, there's no reason to get out of a perfectly good trade. Right? You spend a lot of time and money getting into a perfectly good trade. You know, as traders, we have a tendency, we'll hold on to a losing trade forever, just praying it'll come back. Usually it doesn't, but at least we get to practice prayer. But put us into a trade, give us 2 ticks of green. Woo-wee. Yeah, I'm gonna hang up my headset a hero today. Yeah, I know it's human nature. It's the condition, right? So a lot of things in trading, it's not so much about what's in the chart, but it's overcoming a lot of stuff like that. All right, and so I have a method that will help you stay the course. I'll show you. I'll give you some charts tomorrow. It's called the exit signal. So even though on an extended move, even though I've given you a target and a final target, when we hit that final target, if the chart has not yet produced an exit signal, you could still get out anywhere you want because it's discretionary trading. But if the chart's not giving you a heads up that the move is nearing an end, you'll see. You'll have a chance to experience it here over the week on your own charts. And by the way, if you don't have a platform so that you can run our indicators, you need to call 866-928-3310, and we'll hook you up for the week with platform indicators, real live real-time data, everything you need. There's no cost. Just call Bert, B-U-R-T, 866-928-3310. All right? Okay. So that takes care of this one. Just got a couple more. See how quick we can get through them. Yeah, we already talked about this, but let's talk about it again. Do we exit at the first target? Again, I'm just giving you the most frequently asked questions. The decision to exit at the first target or not is designed to be a fluid one, not a predetermined one. A structured alert that you just saw what an alert looks like, pinpoints the entry, and I insist that we only publish the highest probability entries based upon our methodology. You'll see that. So a structured alert shows you the entry where you can expect some potential turbulence, first target, and it takes you to the takeoff zone. That's the final target. Sometimes there's only one target. Sometimes there's multiple. At the final target, price will do one of two things. It will either launch an extension leg or a reversal leg. One of the two. I'm going to teach you how to read the chart, how to be in tune with what's happening, not how to tell the future. You'll never know what's going to happen next. And you understanding that over the next couple of days, I promise you, that takeaway alone is going to be worth you attending the trial. It just, hands down, no doubt about it, it will. Now, these areas that are highlighted in these, because remember I said, when there's an alert, I don't want you to just trade it because it's an alert. I want you to look at the alert. I want you to look at the chart. I want you to begin to see why. I want you to see the why behind it. There's such consistency in the market's behavior. Yes, it does the same thing every day in a little different way, but the consistency in how it does it, again, you'll never know what's going to happen next. I can't do that for you. And the next time that you feel compelled to buy some new indicator, oscillator, or hire a new guru, because you believe that finally you'll be able to tell the future, I promise you, you won't. The day that you can change the past will be the day you can know the future. Now, these areas that I highlight, as you become exposed to our indicators and to our methodology, the areas will become incredibly obvious. You'll get to a point where when I post an alert, you'll look at it and go, yeah, that's what I figured he was going to do. Structure. We have structure. And that's important for a lot of folks because most people throughout their life, if they haven't been, trading since they were out of college, if they had a career and now you're looking at trading, you probably worked in a structured environment. Even if you were the boss, you created structure for your employees and you became a part of that structure. There's comfort in that. Now you step out into this business being a trader. It is not only a lonely planet, you may be figuring that out, but not when you have access to community like we do here. Do you follow me? Okay. Very good. I saw all the heads nod. Two more real quick. We can do this. Where do I put my stop loss? Great question. With all discretionary trading, you have the luxury as well as the pitfalls that accompany stop loss placement. Ultimately, it's a decision that you must make. Guidelines. Now, in the live training room, we never risk more than 8 ticks per contract on any one trade. That is a rules-based environment. The alerts are discretionary trading based upon that rules-based environment. Okay? So the guideline for the alerts, if it costs more than $300 per contract to determine whether or not your narrative of the market action is truly unfolding, consider waiting for a retrigger. Important prices, important areas are almost always tested. You're going to see these alerts trigger and trigger again and trigger again in many cases. On those subsequent triggers, typically you'll have less risk and greater profit potential. It's an amazing thing. You're going to see it. We teach our traders a proprietary 3-step method to isolate stop loss placement based on information taken directly from the chart. The chart tells you where to put the stop. We're going to show you how to read the chart so that you can place a stop. All right? Eight ticks in the live training room. Discretionary trading, the guideline is if it costs you more than $300 per contract per trade, wait for a retrigger or just look at a different market, a different alert. Okay? All right. Okay. We'll end with a market truth. There are 2 types of market participants. Those who believe with enough of the right stuff, they will eventually learn what will happen next or to become a fortune teller. And it's kind of heartbreaking, really, when you've been around the business a while and you see people come and go and you understand. I mean, it gets this simple. As a trader, we all believe in the beginning that if we, just have one more filter, one more indicator, one more thing to layer on, wow, we're going to hear the hallelujah chorus and we will just know what's going to happen next. Well, like I said before, the day that you can change the past is the day I want to listen to you tell the future. But until you can do that, I mean, that's just a great litmus test. God did not create us to know the future. And it's rather scandalous, I think, of all the websites out there that sell all these things and stuff that promise you that they're, going to tell you the future. It can't happen. The Bible tells you it can't happen. Physics tell you it can't happen. It can't happen. All right, so enough of that. I know, well, what about the Inquirer? They seem to know what's going to happen next. Well, sometimes they do. They've won a lot of literary prizes for their investigative journalism. That's just a sidebar. Okay, so you got all these people, which, by the way, accounts to about 90%. 9 out of 10. Remember we talked about that number earlier? Okay, 9 out of 10 believe that their continued diligence, screen time, more indicators, more classes and seminars, and one day I'll be strong enough and big enough, I'll be able to run fast enough and jump high enough. And, right? Yeah? Okay. There's only 2 types of market participants. Oh, by the way, number 1, they never make it. They just kind of burn out and forget about it and move on to the next thing, whatever else is on their list, life things. Blow up their accounts. Some leave depressed, some leave mad, some just leave confused. It has nothing to do with this them personally, other than the belief that they hold, this this preconceived notion. Okay, so we got to get away from that because that's a myth. It's BS. We got to get to the truth. Now, I got to say this about most professional traders that you run into. Oh, and if you want to know what my definition of a professional trader is, Google define professional trader. And I wrote that years ago, but it still holds true. Now, as much as the professional trader wants you to believe that he or she is a divine being of a higher order, you know, really they're a master fortune teller, but they're not that different from number one. In fact, they're not different at all. But you got to remember or understand not being different is not being the same. Now, along with what you read when you go here, when you Google that, keep in mind the vast canyon separating the profitable trade from the unprofitable is summed up by a period or a question mark. Reread the statement from number one. What will happen next? It's very much a statement. It's very much the number one type of participant, the one that ultimately, unfortunately, just doesn't make it. Now, if we replace that period with a question mark, it makes a very profound difference. That mark on a page or a misheld, not misled, but misheld belief can do the same thing for your trading. Okay? One is blinded by illusion because they think they know what will happen next, or they think they can know what will happen next. They can't. The other is blinded by truth. This could be your Paul moment, all right? But let's face it, we want to be blinded by the truth, not by another illusion. My goodness, how many parlor tricks have you seen out there? That's scandalous, right? So we're going to get away from that. You're going to learn over the next 3 days. Now, you may not take this away. That's up to you. I hope you do, because it'll change everything. If you change your thinking, you can change your trading. And if you change your trading, that can change your life, right? That's why we all got into this to start with. Is it not? Okay. Well, then, if you can't know what's going to happen next, well, what's this all about? Okay. Great question. I can't tell you what's going to happen next, but I can tell you what the next high probability thing is. Okay. Wherever the market's at any given time, day or night, I can tell you. Let me dial that back. All right. I can tell you what the next high probability move is based on our methodology, based on my understanding of the markets, based on my ability to read a chart, which, may mean nothing, and that's okay. But today, when price came up here and put in this double top, I mean, guys in the channel were literally falling all over themselves because what a gift. What an absolutely wonderful gift to see the market lay down this double top and begin this, what was it, 30, 60, 90, we'll call it 2 hours. This 2-hour decline from 27.99, 27.88, that's 10, 11 S&P points. So that's $550 per contract. For the 10 contract trader, that would have been a $5,000 move. And yes, this move up, that was the same, and also this move down. 5, 10, 15. It's a bad week. I mean, that's not a bad week. Tomorrow's just Wednesday, right? Okay. You know how to get a SIM account so that you can use the indicators. That's really important. That's an important part of the trial. Even if you're interested in the alerts, I want you to understand the indicators. Let me show you why. Then I'm going to end this video. Okay. Real quick. When we get a bullish cross such as this, when the CFMA1 crosses the BBC, these things are going to be on your list. You'll be able to ask questions. You'll know what these things are and understand why they're called what they are. All right. We get a bullish cross, we anticipate higher prices. Okay. We went from on the 22nd, we had the bullish cross at 27.75, and we went to, well, on the Sunday night Globex Open, we popped above 2,800. So that's 25 S&P points. We consolidated at the zone here, and we continued up another 14 points. So what is that? 25, 35, 39. Okay. So 39 S&P points, and then we got a bearish cross. When that happens, we anticipate lower prices. Okay. And we went from 2803 down to 2787. We got about 16 S&P points. $50 per point per contract. And then when we get a bullish cross, we anticipate higher prices, which we got from 27.90 up to 27.99. And bearish cross, we anticipate lower prices. And here's what's going to shake out. Okay, here's the next high probability thing. I'm going to leave you with this. And this is live real time, so as soon as you watch this video, if you go look at your chart, it's going to look very close to this. All right. Price is going to consolidate in this area for a period of time. If you're a pattern person, you might see this as a head. In fact, I got a chart of this in the channel. You can see it later. Head, shoulder, weak shoulder, yeah, neckline. We either consolidate, turn up, and this is not the fulfillment of a head and shoulders pattern, or we continue down, we take out this neckline, and we go to the next weekly trading zone below this week, which is 27.75/76. Okay. 10-point move. We, of course, will want to see 27.83 taken out first. 27.75, 76. Okay. Now remember, the whole time you're in the trial, there's almost always someone in the channel, admin, myself. If you have a question, post it in the channel. And if we're not there right at that moment, the second we are back in front of our computer or phone or tablet, beauty of Telegram, we'll get an answer to you. Okay. And it's possible that one of the other partners or passport holders will answer your question, because it's the same questions and the same answers. We haven't changed one line of code in our indicators or one rule to our methodology in it's almost 6 years. And even before that, it was very, very minor tweaks, but there's been no reason for a tweak since then, because if it's not broke, no reason to try to fix it. And if you have been around where there's, like the indicator of the week club, chasing ghosts. No, that's not the answer, but okay. So the high probability thing, and I'm going to let you go, is we come down in here. We're going to consolidate, right? Come into this zone. Price will do one of two things when it's done going sideways. It will head up to the zone overhead. Or once we take out this low, it will come down, or it will attempt to come to the zone below. And tomorrow, you're going to be able to look back at this chart and go, how do you know that? Hey, it's not voodoo. It's not black magic. It's just a market truth. You don't have to believe me. I encourage you not to believe me. I encourage you to drag it out in the light of day. Make it stand up and salute. See, then it becomes your market truth. They may be our weekly trading zones, which we provide to you every Monday morning at 6:15 a.m. Eastern since December 14th of 2009. But when you understand what I just said, is when they're not just words, when you understand it, then you own it. Right? Okay. And as a passport holder, you own the weekly trading zones, the indicators, the methodology, the alerts from the LOGIC247, as well as the concierge trade alerts. You own those for life. So good stuff. I'm really glad you're on the trial. I'm here to help you in any way that I can. My name is Dwayne, partner's Michael, and then, of course, there's the lovely Valerie. She's standing by in client services right here in Telegram, ready to help you. I'll see you in the morning at the bell, and that's the London bell.